Hello and welcome to the final session of our PV Magazine Week Europe. Today is the storage day, and this morning you could already attend. Maybe you already have attended the session with my colleague Maria Maisch on procurement of storage systems. And now in the afternoon we are jumping in applications and how to implement storage systems. We are looking on a special aspect of that, colocation, because we think that it's discussed that colocation can really help to scale storage systems much faster than if you just rely on standalone batteries. I also think, coming from solar, that PV and storage are natural partners, and maybe you can even have the questions why it's coming already now, or why it's coming only now and not has been coming already before. I think it's easy to answer this question because prices have been going down of batteries, and the penetration of renewables in the grids has been increased. So there are two motivations. That will not be the topic today. Today we'll discuss colocation, how to implement colocation, what business models there are, and what technical design decisions have to be made. The technical design decisions like AC versus DC will come at the end of the session, the final 30 minutes. In the second part, we will discuss a more practical approach. So we will have two developers who can explain what their take is on colocation, also retrofitting, and we will also discuss business models. In the first part, with which we start now, we will hear more in an in-depth presentation. We will hear more about how this segment is kicking off at the moment, and with the special focus on hybrid PPAs. Because when I talk to experts and mention the word hybrid PPA, a lot of experts it's exactly the topic everybody is talking about who is in the PPA space. How can hybrid PPAs be shaped? I welcome for this Peter van der Meulen. He is Senior Manager at Level 10 Energy. Hello, Peter. Are you already there? Now I can see
Hi,
you.
Michael.
Great. Hi, nice to see you. You say that you are a data-driven company. Maybe you can explain shortly why you are a data-driven company, how that comes.
Yeah, so maybe a quick intro to Level 10 Energy. So we are the biggest hub for clean energy transactions. So we are a provider of. I have a slide also for that. So we are a provider of the infrastructure for transactions for renewable energy, so including PPA and hybrid PPAs. We are not an advisor, we are really a facilitator. So we have kind of a neutral position within the market, and we are equally working with different stakeholders in that very market. So we are, maybe when you're asking about the data, maybe very quickly how we work. So maybe we support on one hand corporate buyers, right, to help them procure in a competitive and liquid market their PPAs. We also help sellers, so developers, IPP, utilities, either with a route to market for their projects, PPAs or hybrid PPAs, or have them participate in our RFPs that we are running. Additionally, we're gathering a lot of data. We are having tools on our website that is showing real bids and transaction data for PPAs, and we're making a lot of reports. So we are really in the middle of many stakeholders in the PPA and renewable energy world. So this is why we are having a very data-driven approach in that sense.
Do you also have sort of a marketplace?
Exactly. So we have a marketplace. This is where we actually connect buyers and sellers. So you can already see on the slide over 1,300 developers and also hundreds of corporate buyers, where we are actually running those tenders, but also offer them the opportunity to upload projects, sellers, so to have an opportunity for bilateral deals. So also corporate buyers.
Okay, this is also where you get the data from then, for example.
Exactly, absolutely.
You see bids and tenders and so on.
Correct. We have like thousands of data points.
I will stop interrupting you soon because now we jumped a bit faster in the presentation than I had originally thought, because I just want to tell our attendees, our audience, that we will have a in-depth presentation and we want to make it a bit more interactive. You are please send us your questions. I will also try sometimes, if it fits, to place them on the slides. But at the end, we will then do the rest Q&As. We are really looking forward to your questions. There is a chat, and don't hesitate to put them there immediately when you have them. And now, Peter, you can go back to the presentation.
Excellent. Thank you very much. Yeah, it's my eagerness and my enthusiasm to directly dive into these kind of topics. Maybe to start with, thank you to you, Michael, and the whole PV Magazine team for inviting us to be on this webinar. Very pleased to show you our insights. I haven't been attending the whole week, so there might be a certain level of replication. My name is Peter. I'm part of the account management team in level 10. Like I said, where we're engaging with a lot of stakeholders in this market. Maybe to mention still, we closed in 2024 62 PPAs in North America and in Europe, where we have our presence. And in Europe, we closed 28 PPAs. So we are working not only with buyers, also advisors. So we're not advising on PPA strategy, etc., but we really are facilitating the transactions. Now, for today, I have an agenda. So it's a very straightforward one. First, I want to shed some light on the trends, what we have been observing in the market, especially during this year, how hybrid has been evolving. Then on some hybrid structures. So we have been observing a lot of structures for hybrid PPAs. So how it is beneficial for buyers and for sellers. And those are typically also structures that are already being bid into our processes, and there is a demand as well. And lastly, a kind of a valuation of these structures to kind of grasp with real offers, how do hybrid offers in terms of value compare to the traditional plain vanilla base-produced standalone kind of offers. So to see a bit of the value, how it's being translated, these kind of structures into value. Now, starting with the context, so the PPAs are evolving, and we are more and more going to a sophisticated market where with more hybrid PPAs. So why is this? So you can see on the left price cannibalization. So this is one element of the whole market trend. So we see a high increase in price cannibalization, especially in those markets where there is especially a solar deployment. So let's say Germany and Spain. And the more, of course, solar standalone you're having, the more production there is at the same time, typically at midday. And when you have a lot of production, typically the prices at midday go down. Consequently, also negative prices a lot. We've seen like a record year again in 2025 of the number of negative hours. We already reached the same number of negative hours in 2025 compared to the full year of 2024. In the same time, the wholesale market has been going down since the record years in 2021, 2023. And also the PPA, as a consequence of these elements, the PPA prices have been dropping significantly as well. So take Germany, solar standalone as an example. We have seen in Q3 this year a year-over-year decrease of 20%, which is huge. Other elements that also come into play for this dynamics is the hourly matching. So there is kind of the hourly matching, two elements, kind of the regulatory driven one. So we see, for example, in certain sectors, if you want to produce green hydrogen, there is more and more regulation about matching production with the real PPA. And lastly, for voluntarily commitment, so we have like the green pioneers that are really going the extra mile and set their own commitment of consuming green electricity in the moment it is being produced on a hourly granularity. This is a bit, and I don't have to read it all. The idea here is to give you a bit of an idea. As I said in the beginning, we are a market facilitator. So we talk to everybody of how can we help them transact. We're not on the side of anybody. So we talk to buyers, and buyers say, yes, we still want to procure. We have our 2030, etc. sustainability target. We want to do PPAs, but we know we don't feel the PPA base produced is really protecting us. It's a good hedge anyway with a lot of negative hours, etc. There is an interest in hybrid. We see that, but a lot of corporates are still finding it hard to grasp, hard to see what structures are a good fit. How can we analyze them? How can we compare them, etc. On the same hand, sellers, they typically are already in the development of hybrid structures, and they need kind of an offtake, a bankable offtake to have for their project finance. But their question is, what do we need for hybrid products to actually transact and have the necessary long-term revenue to make a project bankable? So this is a bit the dynamic we've been observing, especially over the last month. Next curve, this is to show you the increase of volatility during a day. Now, as an example, Germany and Spain. Those will be the two markets we have a bit more of emphasis on today. To start with the graph, so the graphs are identical, just different markets. So if you see on the vertical X, you see the average hourly day ahead price normalized. So we take one as a normalized base, and you can perfectly see the deviation of value during the day. And we call this the duck curve. But we have like a lot of solar. You can see that it is impacting the value in relation to other hours during the day, where we see at the end of the afternoon and also in the morning, you see typically higher value. And you see also in the years that it's getting extremer and extremer. And we don't see any improvement until 2030, 2031. It might not be in the same steps, but we don't see it narrowing down before. Which actually means that if you have signed already a solar PPA or are about to sign a solar PPA, this is something to take in consideration. If you already have signed one, you might come to a negative settlement due to this trend. On the other hand, of course, for arbitrage with the battery system, the more kind of spread you have, the more opportunities offering as well. So for battery again, but also for hybrid, and we will see that more and more in the presentation, that's also a lot of opportunities ahead of us. Here also a bit of data from all the processes we have been running. I will guide you through it. There are quite a few messages here. So start on the upper left, you can see the number of bids we have been receiving from either hybrid or combo evolution. So combo we typically call solar plus wind. Hybrid is kind of a technology combined with battery. So you can observe especially solar plus storage. It's the red line going through the roof almost. You can see that there is a quarter-over-quarter increase that is significant, right? The last quarter-over-quarter plus 80, adding up to almost 140 hybrid offers. And also the other technologies we see an increase. And we don't see only these offers, we also see the appetite on the other hand. The last processes we have been launching on behalf of corporates, we see that around about 50% of the offers, this was for Germany, have been hybrid offers, and also a fair share of those were actually shortlisted. So there is also, on the other hand, interest and an acknowledgement of the value of hybrid products. Now
Peter, there's a question coming in, but I think also helps for this slide. You say that 70% of the offers are hybrid offers, and you also show this line how many I would say tenders there are with hybrid, which ask for hybrids. But how is it? Are there, let's say, also open tenders or calls from corporates who say, just offer me a PPA, and then some bid with a hybrid PPA and others bid with a solar only PPA?
Yeah, so it's very specific. Some corporates go very openly in a tender, say, okay, we're open to solar, to wind, to a combination, or to a hybrid. Then we are helping them analyze those offers and calculate the specific value, so the capture price of all these prices, and then we can make a recommendation. So we will learn that later on as well. So sometimes a corporate buyer says, okay, I'm interested in both solar and solar plus BESS. Solar is obviously, in terms of PPA price, cheaper, but the value obviously for a hybrid solar plus BESS is higher. And then we make the comparison, and we make the recommendation and the evaluation. So it's sometimes they are very, very open still. That's absolutely true.
Yeah. And when we see these impressive numbers, also how they go up, is that, let's say, is that particularly big corporates who are doing that? So it's really a big demand, so that you can also bid with very big PV plants and storage plants, or is that also something for, let's say, for the segment 20 megawatts or something like that?
Well, 20 megawatt specifically I haven't seen, but it's of more sizes as well. Yes.
Okay.
We typically slightly higher, I have to say. So the project we have been running, we're I would say more 100 gigawatt hours per year up. But in fact, it could also work for smaller projects. Absolutely.
Okay, let's go on.
Yes, maybe quickly 70%. So the 70% is relating to all the hybrid offers we are getting. 70% is so-called green BESS. This is applying to Germany. Green BESS basically means that the battery can only be charged by the renewable asset, so the production asset, which is typically a solar asset, and cannot charge from the grid. So you can only charge the solar into the battery and the battery into the grid, and you can shift the load from low price hours to high price hours.
Yeah, sorry, Peter. There's particularly to the green BESS. There's a question coming in whether they are subsidized or why these are green BESS.
No, that's a good question. It's kind of the wording is kind of evolving in the market. I think this one is quite solid already. The naming it refers because you can still claim your guarantees of origin when it's coming out of the battery system into the grid. You can still, even if you shift your load, you could still claim your guarantees of origin because the battery cannot charge from the grid, only from the renewable energy asset. You perfectly can trace the green electricity. So this is kind of the reason why it's green BESS. It has nothing to do with any kind of subsidizing. If there are other questions, please go ahead. I mean,
no. Sorry, Peter. If I don't talk, there are no questions. Just go on.
Go ahead. So 65 euros. This is the P25 price in Q3 for green BESS in Germany. We've seen P25 is the 25 percentile. So it basically means that 75% of the same technology and market of the data set is more expensive, and 25% is cheaper. We see it as a very competitive threshold for pricing. I think it's interesting to understand that only 1 year ago, 65 euros was more or less the price for a standalone solar-only PPA. So it's interesting how prices to make it a bit more tangible.
And is this the price for the concluded transaction, or is that, let's say, a bidding price?
This is out of our data set. So it typically our data set concludes a lot of bids, also includes the transaction data, but it's based on all the data we are gathering for this technology in this country.
Okay.
Now to look at geographies. So where do we actually, in which geography do we gather those data points? So where is the most traction? And if we see the solar plus storage, you can see a lot of markets, so Poland, UK, other markets, but it's dominated by Germany and Spain. And one of the explanations is that there is a lot of solar deployment, of course, in Spain and Germany. So the cannibalization is very high. The number of negative hours are very low. So there is a lot of potential for these markets. This is also one of the reasons for the today presentation. I would like to focus a bit more on those markets because a lot is happening there. For wind and storage, you can see we have obviously less data points, and it should be no surprise that most come from Sweden, where there is already a lot of wind deployment ongoing. So what does it take? 2024, as you can see in how many PPA deals we concluded, was a very good year, was a record year in PPAs. This year, 2025, we have been encountering more challenges with negative price cannibalization, etc. However, we also see that the hybrid offers and structures are there, and they're going up significantly. And it is actually adding a lot of value to the capture price of the projects. Now I want to go a bit more into the specific products we see. So what we have been seeing on our platform, what is being offered, what we have been standardizing, how we are evaluating it. And we are looking more from a corporate buyer point of view. We see it's a buyer's market, and probably the main trigger can be done by the buyers. So we like to have both approaches, but this time mostly from a corporate buyer point of view. I'm going to show you a chart with quite a few interesting elements. I will go deeper into that after this slide. So I want to give you a bit of a structure, how the differences are and how they can be compared, but don't be discouraged. I will shed more light on it in the following slides. Now, to start with it, we have kind of a decision tree, if you may say so, or main driver. So we start here, as you can see on the left, with the battery and hybrid structures that supply physically. So you actually have a physical supply with nomination, dispatching, etc. You can see that both utilities and C&I have can enter into a tolling agreement. I think a tolling agreement is one of the most well-known principles in the battery optimizing world. So the battery owner is giving the rights to monetize and use the battery to a buyer or to an optimizer. This optimizer has the freedom to optimize in a multi-market approach as he believes he can get the most revenues. In return, the battery owner will get a fixed fee, typically expressed in euro per megawatt per year, but in the end, it's a fixed fee. So for the battery owner, they have a bankable project because they have long-term revenues. And of course, the optimizer or the buyer can optimize it as they wish, and of course, with the expectations to optimize more revenues than the fixed fee payment to the battery owner. Here, from a corporate, or from a buyer's point of view, active BESS management is required. We don't see it too often because typically we see that corporate buyers prefer a kind of the BESS management by the seller because they're typically not set up and have the expertise to actively manage a battery, but it can be done. We have seen Deutsche Bahn, for example, so the German railway operator signing such an agreement in the last weeks and months. So this can be done as well. Now, one other, and we have touched on this one, so it's typically a physical one, it's the green BESS. So once again, here, the battery is being charged from the solar asset. You can shift the load from low price to high price hours, and then increase the capture price of your project.
Peter, I have a question. The question is whether we do the questions now or later. I just give them you, and then you can decide whether you answer later or now.
Okay.
One participant would like to have explained a bit more in detail what the difference between this power storage agreement and tolling agreement is. And the other point is with the green BESS, that it has to be defined in some way. If the buyer doesn't have an active management, then in the contract you have to define it in some way how this battery is used.
Okay.
Yeah. How that works.
I mean, I can, and it might not be the silver bullet, but the first question, it's very similar. Tolling and power storage agreement, the wording out there is very, very similar. So it's very, very similar. Typically, a C&I, so a corporate buyer might use it also or mostly for optimizing or mitigating exposures in their own portfolio, whereas an optimizer is only going for a multi-market approach. But the principle is very, very similar. That's absolutely true.
Okay.
A green BESS, I mean that's upon discussion. Indeed, you should very well in the contract define how it is being operated. If it's based on certain specific hours, maybe, or a certain schedule that you every day fix hour 12 and 13, and you shift it to 18 and 19, or maybe you depend it on the day ahead auction. So that's upon discussion, I suppose.
Okay.
So, in addition to the physical, no surprise, with the virtual, or financial, there is different wording. I'd like to divide them between a standalone standalone one, and later I will show you quickly the hybrid one. So the standalone TBx stands for top, bottom, and the number of hours. I will dive into that later on as well. Basically, it's a simplified perfect arbitrage on the day-ahead market. You have a contract for difference, and you get typically a payout when you have a high volatility on that very market. But once again, I have later on some graphs as well, which might clarify the principle slightly better. But also here to have the full overview. And of course, when you have a new PPA and you want to hedge it, you can either have the PPA and the TBx combined. Why this? That will be much clearer later on. You can have the hybrid fixed block, where you settle against a capture price based on volumes as a block, and you have the hybrid custom shape, where we see a kind of a custom shape fixed profile, where the capture price will be settled against. So these are the different structures we see the most, and where we're getting also bids on our platform from. Now I will go into each and every structure. So this is the hybrid green BESS. So you can see in the graph that so you have on the vertical X the price and the hours of the day on the horizontal X. The yellow line is the price, so the day ahead price. Obviously, once again, this curve, midday low prices, a lot of solar production, and you can actually see the solar production here. That is now kind of the dotted line of the bars. There we assume that the battery is being charged, so it's not being injected into the grid, but into the battery, and it will be discharged. This example between 17 and 21 hours, so this 5-9, because the prices, as you can see, are higher. Like I said, the guarantees of origin are perfectly traceable, and you will just optimize, have a higher capture price because of this load shifting. The hybrid custom shape. It is a virtual structure. It's important to keep in the back of our head. So here, typically the seller offers a certain fixed profile, which is offering a higher capture price than a typical base produced, which is quite clear in this example. It quite well follows the price of the day. It's not necessarily like that. And of course, for the buyer, it's settling against a capture price of those volumes, which are obviously much more valuable. So they get a way more valuable profile. So on one hand, for the buyer is getting a much more valuable profile, and the seller will get a secured revenue for the bankability of his project. But important to know is that this is a virtual agreement. So in the end, there is only, also for the seller, a financial agreement and obligation. What they can actually do is say, okay, I will sell you this project, but physically, I'm going to optimize and monetize my battery completely different. Maybe I will go for the capacity market, ancillary services, or a combination of those. And we typically see that the seller sees more potential on those markets and has an uplift on his revenues there. So this is for their bankability typically, and physically they will optimize the battery in a different way. So this is kind of the upside then for the seller. And quite similar, I would say, to the last one, to the hybrid shape, is where the hybrid shape was the fixed profile. So the seller is committing on on volumes actually. The fixed block is converting the PV generation. The PV generation is the light blue line. It's a typical solar production, right? And this volume is being converted into the block you can see, right? So the settlement is again the capture price of that very block, which you can see with the yellow line again is again much better. Of course, you capture also the lower prices during midday, but also more at the later afternoon and evening. What is important here also to notice, so there is no volume commitment, only in the sense that the commitment is that it equals the PV generation. It's just being spread as a block during the 16 days, so 7 a.m., 10 p.m. during the day. And again, also important, it's a virtual structure, so it's a financial commitment. Physically, the battery can be operated in a completely different way and potentially getting much more upside for the seller. Yes, Michael, you wanted to address that question?
Yeah, Peter, here we have the same, it's always the same question. How do we have to imagine that this goes into the contract? I mean, or maybe that's even a bit more still the understanding lacking. Does that mean that you do, when you sign the contract, do you calculate the value based on scenarios and this sort of calculation, or is the contract more that every day the price is set according to the scheme?
No, this is, so it's called a 7x16. So this is what we've seen more and more in the US as well. So the block is fixed. So the hours are fixed. So the 16 hours. So the 7x16 means just every day of the week the block of 16. So the block is the same. The volume of the block depends on the PV generation. So during winter the block might be a bit lower, and during summer, because there's more production, the block is higher. But it's just shaping a as-produced profile. So the light blue is going to be converted into the dark blue block. So there is no, contractually, I would say it's not super straightforward, but this principle is relatively straight, because the hours are set and the volume is actually set as well. It's just varies every day, and it's depending on the PV production.
Yeah. But it's still with the fixed PPA price, which you agree in the contract in.
Exactly, it's in fact still a typical contract for difference, so with the strike price, right? Yeah.
Yeah. Okay.
Now the standalone TBx. This is a simplified, perfect arbitrage for a corporate buyer. So the settlement will be the strike price against the average maximum spread. So you have always, it depends on the number of hours you agree upon. This example is one cycle of 4 hours, and you can see that the maximum spread here is the average of the 4 lowest hours in a day-ahead market, so the day-ahead ex-post market, and the 4 most expensive hours. So that can be different hours, right? So you can here see that the spread is kind of the difference between the red and the blue bars. What does it mean? And for whom is it beneficial? If a corporate buyer would has an underperforming PPA. So 2 years ago they signed a PPA, and now the duck curve is getting worse than expected, and it's showing a negative settlement of the PPA. It typically comes because during midday the prices are very low, right? If you have such a PPA is suffering from low midday prices, the TBx is actually could benefit from low midday prices if you have like a large spread with other hours during the day. So here you can already see in the example that the spread of this day is already above the assumed strike price here. So this is why if you have an underperforming PPA, a TBx could be interesting, because it's kind of having the counter effect of where a PPA could suffer. The TBx is profitable, and it's also often, it's of course not always, but often that it's the other way around, right? When the TBx, where there is hardly any spread, of course the TBx might be out of the money, it will cost you money. However, it's likely that the PPA is then performing better. So this is kind of where we see that this is a kind of a risk mitigation product potentially for underperforming solar PPAs. And the second one, it's actually the combination of a hybrid PPA and TBx. So if you have not signed a PPA yet, you can combine a normal PPA with a TBx from the beginning. And we could see in the graph that we have cash flows on the vertical X and the years of the PPA here on the horizontal X. And now we assume this is a PPA that is underperforming. So every year in different portions, you could see that that will actually cost you money. So you have a negative settlement of your assumed virtual PPA only, right? However, at the same time, your TBx, because of this spread, it's ideal for the TBx, it's making money. So actually you're leveling your bad performing PPA from the beginning with kind of risk mitigation TBx on top. And the yellow line is giving us kind of the net cash value, so the middle of both. And you can see in this example, you would be in the money the last 7 to 8 years, have a positive cash flow, whereas if you would not have had the TBx, it would have cost you a lot of money. Maybe also for the sake of time, Michael, I would like to show, I will skip this one, but this is kind of a summary of what I just told. Maybe we can share it afterwards. I just want to show you 2 more slides. And this is actually how to value it. So we are collecting real offers and bids, right? So how this is the value of hybrid PPAs currently compared to the traditional PPA prices. Now, again, a lot of information here. These are bids for Spain in 2025. You can see on the horizontal X, the PPA price, and on the vertical X, the so-called projected settlement value. The projected settlement value is us comparing the PPA price with the capture price of this profile of this asset, so the P50 curve on the wholesale market. So if you have a project with a project settlement value of 0, this P50 production curve of this renewable energy asset would have the same price if you would have bought it on the wholesale market. So if you have prices above 0, they are typically the PPA is in the money. So you have you're kind of earning money based on third-party forecast data of status today. You can see here for Spain, we see the yellow dots. Those are standalone projects between 30 or 40 euros per megawatt hour in Spain, and it's kind of in a range between -10 and +10 euros per megawatt hour. So it's right, it's in the money or not. It's a bit like, it's very competitive. However, if you go, and maybe it's not going into every hybrid structure, but you can see all the hybrid structures, we are going more to the right and up. This means that even though, of course, you're paying a higher PPA price because the capex price is higher as well, your value is even higher. So the increase of your capture price is higher than what you pay on top of pay more for the PPA than you would have for solar only. So this is Spain, and maybe to show you also Germany. This is Germany. Germany also very competitive. We've seen also a declining pricing for solar only this year. So we see here already the yellow dots when it's 50 or slightly below 50 euro per megawatt hour. We see that okay, it's going to be a bit competitive. It's close to the 0 line, and everything that is above that price, it's just has a lower capture value than it has on the market status today. What you could see with all the hybrid options, you can see that quite a few of them are in fact above that 0 line. So they're offering you more value than it would capture this profile in the wholesale market. Fair enough. Oh. There are also quite a few below, so there is quite a wild field of bids, but there are some good opportunities there in that sense. Michael.
Yeah, we are running out of time. Therefore, we have to. I think we can only do one question more, okay, because I think it's really interesting. But just to understand, this is from the buyer side. What you are saying, that means it's profitable for the buyer side compared to the market. But now the slide is gone. But I think I can I can remember it. What does it mean for the seller side? Because I think here in the PV Magazine Week Europe, we have probably more sellers than buyers. If it means it's above zero, is it bad for the seller side, or is there is the point where it's good for both?
Oh, absolutely, and that's good that you addressed that question. It's simply a win-win situation, because a seller is not going to make a bid that's not profitable for himself. So the hybrid offers are, if you make an offer, it's assumed to be profitable for the seller as well. What we see with pricing for hybrid structures, where typical standalone technology is very much CapEx, OpEx, and kind of return on investment based, hybrid is, of course, especially virtual structures, is also very much impacted by the assumption of how much can a battery monetize physically in the market. If the assumption is that there is a lot of value to be monetized physically, you can offer probably a more competitive price virtually as well. So the pricing, I would say, has also a bit of a different angle, but we may assume that those bids are also corresponding with the right return on investment for the sellers.
Okay, Peter, that was very interesting. Unfortunately, we already have to finish for today, but I'm sure that we will read more on this and about your expertise in PV Magazine, and I'm looking forward to this.
Excellent. Thank you very much again.
Thank you very much for joining.
Thank you.
So now we want to broaden our view a bit, and we with a bit practical experience, and we are also looking a bit more in detail in two markets. I welcome Luis Marquina. He is president of IP+BESS. Is he already here?
Yes. Hi. Hello.
Hi. Because there's the screen is a bit cut in what I see, so therefore I don't really see it. Great, Luis. Luis Marquina is president of IP+BESS. It's the Spanish storage association. I welcome Marina Villante Sustaja. She is energy storage market and regulation at Fotovatio Renewable Ventures FRV, and I welcome Niels Ahrens, PPA portfolio manager at Sonic Lighthouse, which is a daughter company of Enerpark. Hello, everybody.
Hello.
Hello.
Hi.
Yes, Luis. I think you are the president of a storage association, so you have a broader view than just colocation. You're also taking care of standalone storage. What is your how do you see colocation? How relevant and important is it?
Well, thank you for this opportunity to PV Magazine and to you, Michael. I'm not sure if what I can say is as interesting as we've listened from Peter. A great and excellent presentation, and thank you very much for that. Well, how do we see? Do we see that the colocation is a yes or yes? I mean, there is no way, and there's no other way for different scenarios. The first one is to protect your PV asset. I mean, whether if you have grid connection for discharge or you don't, which is the main issue in Spain. What we see is a colocation where the batteries are charged from the PV plant. It's now a potential, is a real potential good investment, but it doesn't happen 18 months ago or 12 months ago. Now the prices are dropping down from the batteries, and we see good numbers in this co-located without any connection to the grid. Okay, only connected with the PV plant. If you have the chance to access to the grid and to have demand from the grid, then you can connect your batteries in. It's co-located, but this is like a standalone, in fact, and then you can probably have a better investment. Okay, we are not in the stage that Peter has showed us, in the sense that we are still working on the permitting. We are still understanding which is the construction risk, how to manage all the technology agreements and contracts, and we are not yet in the tolling or power storing agreements or any bankability structure. Okay, but it's going to happen in 2026. the co-located is a real I'd say it is essential for the ministry strategy, as we have a new royal decree which will try to speed up all the permitting process. And the first thing, and it is very, very important, is within the perimeter of the PV plan, which has been previously evaluated and approved, okay, then you don't have, if you want to start batteries, you don't have to do any evaluation plan. Okay, so it could give you about 6 to 1 year of timing, which is, the timing is of the essence, and in permitting, of course. So
and this regulation is already in place?
yes, it's already in place. Yes, it's about 3 weeks ago. Okay. So it's a very interesting regulated for co-located. Okay. If you're out of the permitting, you don't. You have to do your own plan. Okay. So I mean, everybody is really focused on co-located. First of all, to save your PV asset, not the wind. The wind, they're not as complementary as the as being photovoltaic assets. I think there's no other way. Okay, so we really are pushing that, and there was a mantra saying that the co-located without charging from the grid was not a good investment, and we really think now the numbers are still to run properly, and that's what we think is going to be a great push ahead in 2026. Okay.
We will have a closer look to that, but let's first ask also the other two panelists here. Marina, Fotovatio Renewable Ventures has a big fleet of solar in Spain, but for the non-Spanish audience, please explain a bit what Fotovatio is doing and what is your take on co-location. What are you doing there already? What are your plans?
Of course. So thank you everyone for watching, and thank you for the opportunity. So FRV, or Fotovatio Renewable Ventures, is a global renewable energy platform focused mainly on large-scale PV and battery storage. We develop, own, and operate projects worldwide. And we have experience in all the part of development, financing, construction, and long-term asset management. So in this sense, our view is that when we hybridize, we don't just add a battery to a PV plant, but for us, it becomes a new asset class. And this is really important because this new asset class will combine the best of both worlds, right? It has also different risks and different revenues. So we do not like to treat it as a simple PV plant or standalone BESS. And for us, the biggest change here is that we used to sell mainly energy, and now we are selling flexibility to our off-takers. So this hybrid asset can shift, shape and firm the output, and this is what many off-takers and system operator really value today. So it becomes like a much more valuable asset. We also have seen that adding BESS to our PV plants improves the bankability of the whole project. And this whole new asset gives us the opportunity to rethink the PPAs or renegotiate them. And it's also really important to take this into account when we analyze the project. That we are not only optimizing the PV LCOE, but we have to model all the PV plus BESS together and optimize the whole combined asset, right? Align with this idea of selling our flexibility. So that's our view.
Yeah. Just one question on retrofitting. Is that something what you also consider, retrofitting existing plants?
Yes, of course. As Luis was saying, I fully agree with him. BESS will be necessary, and this will happen. And it's important to retrofit the current plants, and this takes us to some challenges, right? In retrofitting, for example, you could have a plant which already has a PPA in place, so you should rethink those PPAs when adding a new installation, as it becomes a new whole asset class. It's not just PV plus BESS, but it's a new kind of project.
Okay, let's dive into this later. Niels, I would say, let's say it's a bit equivalent with what Photovoltaic does in Spain, what you are doing in Germany. Enerpark is one of the biggest IPPs in Germany. Your Sonic is the trading daughter of Enerpark. Before we come on the trading topics, what is your mother company planning with its existing plant and future plans in terms of colocation?
Yes, thank you, Michael, for having me on this panel. Enerpark is here in Germany. We're looking at all our existing PV assets, which is roughly 500 plus. And besides that, we're also looking at our own substations, which we also own. And we are basically checking which kind of BESS can we actually get a permission to the grid, especially looking towards those gray assets, but also checking on each side, is it possible to add some more containers, like the batteries, to it and use it as a green battery. So we're looking at all the opportunities there are and keep exploring new ones.
What do you think? Do you think new PV plants will always be with storage now?
I assume the new solar assets will always be with storage. I mean, we've all seen the presentation from Peter just a few minutes ago. The amount of negative hours has heavily increased, and in Germany has heavily impacted the PPA prices of settlement in the end of the year. And the battery obviously is a natural hedge for this risk, and it just makes sense to adapt or to adopt another battery to your solar asset and, for example, shift your solar generation at peak midday during negative prices to your high evening prices and even make extra revenue due to that high-low spread.
And on what does it depend whether you retrofit existing plant?
Sorry, can you say it again? I didn't hear it.
On which factors does it depend whether you will retrofit the existing plants which you have? Does it depend on, for example, do you do it only if you get also the grid access for charging the battery from the grid, or are there other factors?
For retrofitting, I mean, it's a bit more complex. Besides, I mean, obviously the most important thing is looking at the grid permission. Are we able to use it as a green or gray battery? But besides that, we also need to look at the existing land lease permit, because there's a contract in place which might allow BESS or not, and then there might be some new negotiations happening. Or there might even be a PPA in place where we're already selling our energy to an off-taker or utility. And this PPA might restrict us from adding BESS, or when we're doing retrofit, there's even the possibility of us decommissioning some of the modules to make some area, some space for the containers. I mean, the containers are not huge, but they still need some space and they need to be put somewhere. And all of this put together, we need to look at everything on each project specific site and need to find out where that makes sense to adapt to BESS or not.
Luis, when we discussed about this panel beforehand, you raised the point that even though if you have a PPA in place, which is still running for the next, I don't know, 5, 6, 7, 8, 9 years, you would recommend to consider to retrofit with BESS. Why this? Oh, you're muted. And I think you're muted. Or is it?
I don't recommend that, but it's a real scenario. Okay, when I mean the PPAs or whatever any other structure, as Peter has said before, needs a sort of flexibility from both sides. Whether the agreed price is quite long from the real price, then something is going to be broken. The seller or the buyer are going to do whatever they can to break the PPA. Okay, so that's why we think there are new structures, there are new kids in the block, no, and the tolling agreements, for instance, the power storage agreements are going to be very, very interesting structures to provide bankability to the co-allocated or standalone assets. But in what we feel is in Spain, we are still 1 year, 6 months to 1 year to arrive far, to arrive to that moment of the market. In Spain, there are 25 megawatts connected, and we expected 300 megawatts commissioned by ending 300 to half gigawatt ending in 2026. So we are still in the very early stage to understand all the different structures. So we want to learn about that. It's a moment to start to learn about the new structures. But I mean, we will never recommend to retrofit this PPA.
Okay,
But
sorry that I missed that. I think I tried to make that more probably a bit pointed more on the, bring it to a bit more on the point. But would you say that one can reach win-win situations when one negotiates PPAs with adding storage to existing plants? Does that make sense? That it's a win-win situation for seller and buyer?
I think there are at least a lot of assets that are going to be a lot of PPAs that will have to be negotiated again. I don't know if there's anyone who could share this idea or this opinion, but I'm secure with the batteries. The asset is different. The way to provide energy is different. The pricing will be different. Everything will be different. So the PPA should be reconsidered and reevaluated again between the same players. I mean, it doesn't mean that I don't want you as a off-taker or I don't want you more as provider. No. But the detail will have to be reconsidered in the benefit of the both sides. Okay, not against the both sides. But batteries is going to change the model, and whatever be co-located or standalone is going to change the model here, is going to change the asset itself, is going to change the asset behavior. So probably how to sell energy will need to be reconsidered again.
Marina, I think that is quite similar to what you have said beforehand. But you already started to explain a bit the challenges. What are the biggest challenges doing this?
Yeah, so in this sense, this new asset class means that we are moving away from a simple energy-only view. So everything has to be, of course, renegotiated. For example, PPA structures. I mean, we have a lot of options. There's no standard yet because structures are still evolving in the market right now. But for example, we could keep PPA for the PV and have a separate special tolling agreement for BESS, or we can design one single hybrid PPA with custom shape. There are a lot of possibilities there. Also, when retrofitting the project, the challenge there is the existing contracts, right? So adding BESS means you have to renegotiate all the definitions of performance, availability, the whole structure. And also a key challenge that I think it's really important is to keep the PPA or the FPA and the long-term service agreement with the OEM back to back. If we promise a certain level of flexibility, performance or availability to the off-taker, we need it to be covered by the long-term service agreement with the OEM or the OEM, because otherwise there's a gap in risk allocations. So there are also new inputs that we must consider, such as the availability, the round-trip efficiency, the state of charge limits. And it's really important, a strong benchmark for the revenues when they are merchant in terms of the optimization. We need to be sure that the optimizer or the trading strategy is really capturing the best possible revenues for this kind of asset.
Sounds like still quite a lot of work to do. Niels, your business model in Germany is, let's explain a bit to the European audience. You have a lot of installations with which have won tenders, so you get some, let's say, some market premium, and then you add a PPA on this. It's short-term PPAs. For doing this, do you think these models which Peter have shown us are also interesting? Because it's a common, I would say it's a common business model in the German market.
Yes, obviously they're very interesting, and I would have to agree with Marina here. Like, the market is still pretty new, and there are a lot of very complex structures being discussed, and there's no structure that has yet to be determined at the market standard. Everyone's looking at it, a lot of off-takers and everybody else still needs to understand these structures, what are the pros and cons. But let's end. On top of that, you would have to differentiate between who is the actual off-taker of this co-location asset. Is it a utility which is more or less interested in balancing and multi-market optimization, or is it an end consumer who might be more interested in a price hedge against price volatility or price certainty? And all those different needs are met by different kind of structures. But let's say, like what we're seeing right now in the market, let's say for an off-taker, what is being discussed at the moment, a lot of this in Germany that we would call the high-low spread, what Peter presented to us as a top-bottom TBx structure. As I understand, it's basically the same. But in the end, the market is still trying to find its own solution.
So as there are no standards, there are no standardized ways terms so far. Yes, we have to move on. Thank you very, very much, Luis Marquina, President of IPBAL, Marina Villalantes, Stagia, Energy Storage, Market and Regulation, Photovatio, Renewable Ventures, and Niels Ahrens, PPA Portfolio Manager, Sonic Lighthouse, Inner Park. I'm sure we will hear more about this the next year, because as we heard, there's a lot of work to do. We want to now have a look in the, let's say, in a more technical discussion, because there's not only the business models in question, but also on the technology side, one has to do some technical design decisions. And in order to discuss that, I am very happy that I can welcome Yanni Lu. She's Senior ESS Product Manager EU at Sungrow. So she can deliver you components for that, and I'm sure she has some recommendations. I welcome Sven Albersmeyer-Braun. He's VP Sales, Central Europe SIG Energy, also a component and battery supplier. And Kai Siemer, he is Head of Solar Engineering at Vattenfall. So he is basically a potential customer. We want to start this session, this last 30 minutes, which you have left. We want to start with a short explanation of each of you, what your concepts are, and with a short explanation why. Please keep this short, so we allowed 1 or 2 slides, and because then we want to come into a discussion about these points. We want to start with Yanni Lu. Yanni, can you show us what concept Sungrow is offering, and what the advantages and disadvantages of these concepts are?
Well, hi, good afternoon, and thanks for the invitation from PV Magazine to have me here today, and nice to meet you all. So Sungrow, we act as one of the biggest ESS supplier like in Europe, and currently we can both offer DC coupled systems and AC coupled systems. Like for AC coupled system, which is I think over 90% of the projects that we bring to Europe is with AC coupled solutions. Like the structures and the control logic is relatively with DC coupled solutions much easier. Like we charge and discharge to the grid by our systems, and it's not connected to the PV part. But with DC coupled solutions, it's a little bit complicated, as you can see from the left part of the diagram. So we divide it as day mode and night mode. Simply said, if the network circuit breaker is, if it's off, it's disconnected, then it's night mode. Then when at this point, then the BESS can charge into the grid. But unfortunately, because of the net grid connection application thing, and also the VD certification things, so currently we can only charge the BESS or the PV into the grid, but not charge the batteries with the energy from the grid. And also during the daytime, when the PV module part, the connection is on, then there are several modes. Like you can charge, a PV part can charge battery and charge into the grid at the same time, or PV part can charge into the grid individually, or ESS part can also charge into the grid individually. But let's say for this mode, the control logic is more complicated. And for the project developers, they need to do more revenue analysis about, okay, if it's make sense from financial perspective, and also like from a device perspective. If you compare DC coupled solution to AC coupled solution, of course, from CapEx perspective, you can save the cost from some cables and also from one MV, from the MV station part, because you can share the MV station in through. But let's say in practical, I would say still always comes like the pro and cons with DC coupled solutions, because of course the efficiency is much more better than AC one trip, because the 1+X central inverter, the efficiency is a little bit higher than the power converter, like bi-directional system that we are using for AC one. But if you take the part that you cannot charge the battery from the grid into consideration, I think for that part, we need to pay more attention.
Thank you very much. We will discuss soon about this. Sven, now it's your turn. What is the SiC Energy offering in this context?
Hi, Michael, and thanks for having me today. Yes, SiC Energy is, in contrary to SunGrow, we are the newcomer to that business, and we are coming with something really different, because we are not only offering a DC coupled storage system that can be scaled to megawatt, but it's also super decentralized. So as you can see, I have brought here a slide where you can see like the classical installation of the panels, and then underneath the panels you can stack the battery directly connected to the hybrid inverter that is also like connected to the panels. So like this, you of course have minimal losses in storing the energy from the panels, and yeah, you are actually converting only once the energy and not 3 times like with an AC coupled system, which we consider to be a pretty big advantage in terms of round trip efficiency. And that has a big advantage. Let me just click, if I can manage to click to the next slide. Here we are. One of the bigger advantages of a DC coupled system is, of course, that we can save the resource grid connection, because grid connection is the critical part, or one of the critical parts in big solar installations. And by DC coupling, you can more or less divide the grid connection needed by half compared to an AC coupled system, because usually grid operators would consider the AC coupled storage as being just a second generator that potentially can also discharge to the grid with the same power than the solar installation. So like this, for existing and already finally planned but not yet installed parks, it's a great advantage, because you can like maybe use the freed grid connection power for another storage system, an additional one, or you can simply reduce and save some cost. That's one thing. And the other thing is, as you can see on the left side, we can really put a lot more panels onto one inverter than you usually could do, because the hybrid inverter can, of course, at the same time put energy DC-DC into the battery and convert into AC. So you also need much less inverters. And like this, you are not only saving like a complete line of inverters, so the PV side, you are not only saving a transformer, but you're also saving on the number of inverters that you actually need to install the same park size.
Okay, thank you very much, Sven. Then we go to the third panelist, Kai Sima from Vattenfall. What are your concepts which you're using?
Yeah, thank you, Michael. Very good afternoon. Thank you for having me. So very few words on Vattenfall as a company. So we're a major European utility, mostly active in Northern and Middle Europe. And we also have a pipeline of, now, as of today, more than 12 gigawatts of solar and batteries projects combined. And that is in all different stages of maturity, of course. And I'm representing our utility hybrid business. So Vattenfall also does decentral solutions, but talking about the utility scale business, we combine BESS with PV systems wherever we can. Our typical installation is in several tens of megawatts. And as of today, everything is AC coupled on medium voltage level. The main choices that we have is putting the BESS either inside the solar park or in the vicinity of the substations. The vast majority of our systems is connected to the high voltage line, so 110 kV typically. And then we can put the BESS either in the vicinity of this point of interconnection or in the park. Our solar system is, as of today, based on a string inverter concept. So we have the solar system, the string inverter, we have a medium voltage transformer, and then we run to the substation, which is typically a few kilometers away. And either we connect then the BESS system through a similar setup, BESS system, inverter, medium voltage transformer, and then connect on the medium voltage level, either inside the park or have the BESS system then at the vicinity of the substation.
Okay, thank you very, very much. Now, as we finished with you, Kai, I just would like to hear my opinion of you. I mean, you pointed out that at the moment you are doing AC coupling basically mainly. Is there a point where you could consider also DC coupling?
Well, we're following the market closely. We're looking at option. We have run a feasibility study. We see the potential mostly in CapEx savings as well as in efficiency gains, as Sven and Yanni has pointed out. But also we would love to have the market a bit more, the supplier market a bit more mature, and we see regulatory/metering limitations. We do both use BESS systems both in gray battery applications as well as green battery applications. So we, depending on the boundary conditions, we either use the BESS system then just to store PV energy, or want to charge from the grid. And especially when we want to charge from the grid, we see extra challenges when it comes to the metering as of today. So this is why, from today's perspective, we do everything on AC coupled, but we follow the market closely and hope that eventually we'll be able to benefit from the potentials.
Thank you, Yanni. I mean, we come back to your technical explanation soon, but maybe let's step it back. Let's step one pace back. I mean, we are talking about AC/DC coupling as decision. Are there other design decisions which people should make, which your customers should make, or is it a basic one?
I think from the supplier's perspective, we mainly would just provide some suggestions for the client to do some risk assessment before project really start. But I think mainly concern point from commercial side, of course, if it's the revenue part, and from technical side, it's one thing about grid connection, and also they can think it's about like the control logic.
And Sven, what do you see as technical design decisions which have to be made besides, I mean, of course, you also already presented that one can decide for this decentralized solution. Let's say in this decentralized solution, what sort of decisions one has to make there?
Well, of course, it depends like on the park design, right? Because being so decentralized, of course, you can really like plan the amount of panels you put on one balance of system, for example, the exact string length that fits perfectly to the string inverter to like make the installation process super easy, which then will save again money for the setup of the park or installation of the park. This is one thing. Then, of course, a very general thing that is often in discussion is south orientation versus east-west orientation, together with how much grid connection power do I have, how much battery would I actually need to to avoid negative pricing and to shift the energy in case of green storage towards the high cost hours. And there can be a significant difference between south and east-west orientation, obviously. So I consider this also to be a quite interesting and important consideration.
And Kai, from your point of view?
Yeah, we do have, of course, a lot of boundary conditions from permits, from grid applications. We do have some choices that we can make on the solar system, many more degrees of freedom than we have on the BESS system. So, for example, as one pointed out, type of technology of the mounting system, tracking or not tracking, south-facing, east-west, DC-AC ratios, and we do have some few sophisticated models to come up with the best scenario, but of course the result can be different. The parameters are the same when we add a BESS system, when we go hybrid, but the outcome of these parameters, the best choice of the parameters, can be different. And then regarding the BESS system itself, of course, choosing the right capacity, choosing the right power, these adds degrees of freedom in the design choices to make.
I would now like to go a bit more detail in these three design. I would summarize. We have seen three concepts. One is this AC coupling. One is DC coupling with a more centralized approach, what Yanni has presented, and one is DC coupling with a more decentralized approach, with what Sven has shown. One point you all mentioned was efficiency. The other point everybody mentioned was cost and maybe speed of installation or something like that. Maybe we can go through these 3 points. The efficiency, Yanni, you mentioned that is higher with this hybrid. Your hybrid solution, can one quantify that? And what I haven't understood is you said in this setting where you don't charge from the grid, the efficiency is higher. If I would say I want to have it, at the moment it's only regulation that I am forced not to charge from the grid in this hybrid setup. Let's say regulation changes and I can charge from the grid, would you have to change the technical setup, or would there be still the efficiency advantage of the DC coupling?
From our current solution, you can charge into the grid with the full power of the 1+X hybrid inverter solution. But if we want, but now if the regulation changed, we're allowed to also charge the battery directly from the grid, not from the PV, not only from the PV. Then the power is limited at 60%. So I would say that in this case, the round trip efficiency shall drop a little bit lower than the AC coupled one, because AC coupled one for both the PCS can also do 100% CP mode.
But would there be, so that would mean from the efficiency point of view, then I would go for AC.
Yes. So also depends on how the PV park is designed. But if the developers, they have the permissions to get the second grid connection, we would recommend AC coupled, but still DC coupled is open as a choice.
Sven, you also mentioned the efficiency. I'm sure your customers will ask that. How do I let's say, evaluate efficiency in such a situation? I mean, it's difficult, I can imagine, because there are a lot of things factoring in. Is there a number?
And I guess that Kai probably knows much more about this than I do.
I will ask him about this afterwards.
I would share a number at least.
But let me say, we do see that this depends again a lot on the park design, cable length, setup. All this is really important in that case. But I can say that generally speaking, as I said, saving like 2 conversions and being in our decentralized version really close to the panel and having nearly not 0, but a very, very low loss on the charging side. We consider this to be between 5 to 7%.
5 to what?
To 7%.
Relatively. To a AC coupled container solution.
Yes.
Yeah. Kai, what would you take this number?
Yes, would agree very much to the same for those energy that goes through the battery. And then it's the question, how much of the PV? So first of all, we were looking at the DC coupling for the moment exclusively for green batteries. So for no charging from the grid, but only charging from the PV. And then it depends very much how much of the PV energy goes directly into the grid, for which you wouldn't expect any advantage, and how much would go through the battery. But yes, for those going through the battery, in fact, it saves inverter, it saves 2 transformers. There we would see we come to 5 to 6% efficiency gain for those energy that goes straight into the battery. And then weighted average, we assume something 3 to 4% of overall efficiency gain.
Yeah.
And that is a lot. I mean, 3 to 4% extra energy for free. That is really a lot.
Janne, what do you want to comment?
Yeah, sorry. No, I just wanted to say, I'm really happy that you are basically on the same line. I just wanted to add, I don't see that there is at least for our technical setup, a big disadvantage. I mean, we can also store energy from the grid, AC, at 100% of the inverter power. So there's no limitation there. And yes, we really try to change at least the idea of regulation that is currently discussed by Bundesnetzagentur in the MISPL consultation. We also handed in our opinion on that and how we feel that it is absolutely possible to also have mixed operations for DC coupled storages, and for obvious reasons, because the advantage alone on the grid connection capacity needed overall for the whole transformation of the energy system towards renewables is so dramatically high that we need to have a solution there, from my point of view.
Maybe for the audience which is not coming from Germany, the Bundesnetzagentur, the federal agency for grid, that has a process at the moment where they are evaluating which sorts of how the regulation will change. And at the moment, they have a draft which would say that with DC you are not allowed to charge from the grid, but it's still in discussion. Janne, you want to comment what we have just heard? Yeah. Janne, do you hear me? You have any comments to what we have just heard? Or otherwise, I would also have a question.
Yeah, I do agree with what Kai said. Like we also see it in the similar way. Yeah.
So the problem or let's say the challenge for your system basically would be to get away from the 60% limitation. Is that something you might solve in future?
Yes, we do see the possibilities because in next year we will have the new generation DC coupled solution. So by that time, it won't be an issue anymore. Yeah, and I don't know. We discussed it beforehand, but I don't know whether we were able to do that.
we are now talking about Germany with this limitation. How is this in other countries? Does anybody, I mean, you're all more on the German markets. How is it, for example, in Spain? Does anybody know it? Are we allowed to charge with hybrid from the grid? Okay, I think nobody is saying yes.
No, actually, I have
Yeah,
no
we
idea.
have to clarify that later. But I mean, there's another point, which is also the same, I would say, all over Europe. So it's not country specific. That is the cost advantage of DC. Yanni, you mentioned first that there's a cost advantage for DC on CapEx side. Can one quantify that in some way?
Let's say, if, like, let's say if you only have one grid connection at your PV park, then compare with AC coupled solutions. Of course, you like from the AC side, I think the cost is almost halved. If you consider the inverter as well as the MV transformer and the RMU and also the MV cables, since it can share the same part from the PV side.
Okay. I think Sven already mentioned, I mean, it's difficult now to compare it again because Sven, I think you have made already your point that you think that the decentralized solution in general has some cost advantages. But I think you haven't said any number. Do you have any number how much it can be from your evaluation more cost efficient?
This is always a very difficult question because it depends so much on the specific project that it is very hard to give you a general number. I can just tell you we just closed a 100 megawatt hour project deal with this decentralized solution, and the developer told us they calculated a 15% saving overall compared to an AC coupled storage, considering everything. So, and everything really means everything. I think this is also something that is really important. I mean, it's not just the initial capex that you need to worry about. I mean, you have like 20 or more years of operations. You have to look at what is the cost for the operation of each kind of system, because there are big differences. Because usually containerized storage solutions do have quite some operational cost and maintenance cost, which, for example, our decentralized solution doesn't have. That's one thing. And the second thing is also that, we found a way to avoid any concrete in the park, for example, to install the storage, which means you also don't have to remove it after the 20 or 30 or whatever years, which is then also a cost advantage, which is, of course, very far away, but nevertheless is there. And these kind of things, it's really, you have to go into the details of how exactly you have to build the park to understand where you can have advantages that are costing you money, saving you money. Sorry.
Kai, I mean, you have the role here that you're not offering system, but buying a system maybe. I mean, of course, do you think that it's possible to discuss it in this general way? Which sort of system setup is more cost efficient?
Yeah, we see the potential definitely of a DC-DC coupling system, and I mean, we didn't go into any secondary effects yet, which are perhaps based more on a how to say, different system design for the BESS itself. But just looking at the overall architecture, yes, we can save 1 out of 2 transformers, we can save 1 out of 2 inverters, we can save some switchgear depending on the architecture where we are. That would give us a capex savings of single-digit percentage-wise number. I don't want to share a very exact number because this, in fact, it varies. Depends on a lot of factors, but it's also not negligible, and helps contributing to the economics of a hybrid system.
Yeah. Unfortunately, we already have to come to the end because it's 4:30, which is the end of our PV Magazine Week Europe. I thank you very, very much. I think we could go on with this discussion even longer, which we have seen now. I thank you all three, Yanni Liu from Sangro, Sven Albersmeyer-Braun from SIG Energy, and Kai Siemer from Vattenfall. Thank you very much for coming. Yes, this is not the end, not only of this session, but only of the PV Magazine Week Europe. I hope you benefited from it. I want to thank our sponsors, without which this would not have been possible. So as lead partner, we have Create. As platinum partners, we really thank Huasan, Jinko Solar, Scholz, and Trina Solar. As gold partners, we thank Belectric, CA, and Stolpli. PV Magazine Week Europe has passed now, but we have a lot of webinars going on the English platform as well as on the regional platforms. For example, on the German platform, we have a webinar plus, so it's a paid webinar with a smaller audience and more interaction, where we have invited an analyst from the Nervis, which is coming soon, I think it's next week, 9th of December, on business models and revenue opportunities and also some revenue numbers for co-located plants in Germany. If you are interested in these webinars, please visit our website. On the global site, you can find all of those. Yes. I also want to thank the event team of PV Magazine, in particular Michaela Aue, who has organized this, and it was really great organization. Thank you. She's just behind. Thank you very much, and bye-bye.